GME, the GameStop, short squeeze bubble, the shape of it and the trading pattern compared to the S&P 500 uh, bubble, the everything bubble. They're looking pretty similar. I'm going to show you the pattern, and this would be pretty cool if it actually played out like this. This will be a fun one. So this is Brian Lewis with MMT Investing, coming to you from Lima, Peru. And yeah, please hit like if you like, and comment, share, subscribe, and the bell. Yeah, so let's go. Okay, so on this GameStop, this was January 2021, the crazy GameStop squeeze bubble situation. And we have this pattern here. So it's, you start hopping, 1, 2, 3, and we missed, this is overnight, so we missed the low and the high here on the overnight trading, but 3, 4, and then a wider lower one, right, into the resistance, boom, to the downside, and then you go sideways across, fail, down, right, breakout, and then look at the bear. It's a really lame bear market for a long time, wider than the bubble, and then we got this pop after this. I don't know if that matters for the, probably does for the let's just do that. So that's the pattern. It's 1, 2, 3, 4. Higher high, lower low, higher high, lower low, higher high, lower low, higher high, lower low. Megaphone, right? And then it spits out sideways to a lower high, boom, and then you get the crash, sideways down, pop, right? So you can see the descending wedge, and you can see sort of the megaphone until you cross the wedge there. Now let's go to the S&P, and let's take a look at what we're doing here. So this is Volmageddon, the first pop, right? And this is the 2018 crash, higher high, lower low. Then we got COVID crash, higher high, lower low. And then number 4, higher high, right? Whoa, lower low here. And then it spits out to a lower high, and it's wider, right? And then down, and then you go sideways, down, and then breakout. Okay, so let's grab this trend and move it out here like this. It's something like that, right? And then you would go out into a long bear market here, which goes to, who knows, 2040. This is like a 20-year bear market if this pattern played out. And then I don't know, 2050, there's like a little pop, it goes bullish again. Yeah, so that's pretty much the shape of the GameStop bubble versus the S&P bubble, and where exactly the down move happens here, I don't know. But yeah, I mean, COVID was this huge, crazy event out of nowhere, unexplained, and it fits the pattern. Wham! That's pretty weird, yeah. And now we have banks collapsing. There's 186 banks set to collapse. I have a short list of uh, 5 or 6 that I specifically think might be next, not including the European banks. I mean, Deutsche Bank, I think, is about to collapse, and HSBC is pretty nasty. That wouldn't surprise me. But in any case, I don't think anybody expects us to go take out the COVID lows, but we could literally do that right now before the end of this year. Um, and I don't know. Yeah, I mean, based on the interest rate cycle, I think that we have finished the topping process and we're about to head down. And it may take a month or two to start, but I think it's starting now. So according to this model, right now, by whenever, by the end of this year, between now and the end of this year, we can move all the way down to lower than the COVID lows on this downtrend. If we follow the same bubble pattern. And this is actually a pretty common topping kind of bubble pattern. Yeah, and it looks like that, and that is like 30 years of craziness. But yeah, but one more after the bottom, one more huge run up that could take a couple of years. Yeah, so really cool. Check this shape out. This is wild. And then I'll go look at the euro dollar chart. I do this on most videos just to point out where we are in the cycle. So this was the hiking cycle 2018 crash, COVID crash, right? The last hiking cycle. This hiking cycle, we had the stimulus to try to keep us from going to negative interest rates, and we went way up here. We broke out of our downtrend, uh, but we just did a peak reversal here, and we have banks collapsing. So that marks the top of this hiking cycle, and it just depends when we come down. If we come down now, we'll get the beginning of the crash now. Um, I guess it's possible to just crash straight down. Like that's kind of what that bubble chart pattern looks like, and we have the reason why that could happen. We could have a compounding roll of all of these banks collapsing, and it would not be surprising to have interest rates collapse to zero and have the market crash just to right where it shows in that pattern. It would not surprise me one bit. Um, so put options. Put options are what I'm doing to just in case this craziness happens. And it looks like this pattern can play out to the end of the year. So yeah, like 1 or 2 year puts, like 1 year, and not financial advice as always, but like how I would think of that is maybe 1 year puts near the money or 2 year puts a little bit out of the money kind of thing to play the big move, or try to swing trade it on the way down if it's happening. Yeah, if it starts going down, the downside target is well, uh, is this. The downside target is this, like 18 or something on the S&P by like the end of the year. Yeah. Wow, that'd be crazy if that happened. But yeah, so we got our peak reversal and we got this volatility, and right now you can see we have this flat topping pattern, peak reversal, we're underneath it, back testing it right now. What happens after you back test the thing? You go down. So it would not surprise me to go down right now. And I'll take a look at, let's see, I'm going to do oil and bank videos, I guess. Oil, well, I mean, oil, the contango on the oil futures made this look crazy, but we're just coming into support on oil, and oil generally crashes during a recession, and we've got, well, Putin is like moving nukes into Belarus, like next to Poland. Like this war could be ending soon. The sanctions haven't worked at all. Like all Russia did is ship all the oil to like China and India the whole time and operate outside the dollar. So that's not working. Like the nuclear threat could make this war end pretty quick. But yeah, I think if we get an interest rate down cycle and we get the end of the Ukraine war, which could happen whenever, that would be a huge supply of oil and a huge demand shock and just prices crashing. So this is one down move for the recessionary thing, and then the banks have already started falling. Uh, Ally Bank is one that has a lot of deposits over the FDIC limits with an ugly balance sheet, and it's also crypto friendly. This is probably my favorite to get in trouble next as far as American banks. Citibank is a big bank, and they're a shareholder in the New York Fed. They're a Federal Reserve bank, basically, but they are terrible in terms of profit and loss. Like they're awful. Um, if like last domino to fall, I think would be Citibank, and then like this is a list of the banks. There's like 186 banks in trouble, but these five I think are the worst ones that I found. But their charts already collapsed most of them. Zion, Comerica, KeyCorp, like these already felt like these banks haven't gone under, but their stock charts have already crashed. So I don't know if in terms of like a short play on these PacWest and Western Alliance. So yeah, I'm looking at Ally or Citibank in terms of like puts on a bank. And then other than that, we have the Nasdaq versus the S&P running into resistance here. Like the dominance of the Nasdaq has been going up a lot the last couple of months, but it's back testing the trend line, and that could reverse now, which would be bad for the Nasdaq, bad for NVIDIA. So that's one idea. Like it's scary shorting a stock that looks this strong, but you can see the downtrend, and if it reverses and goes down, there's a long way to go. Yeah, so that's NVIDIA, that's the banks, oil, like those are the things I'm looking at shorting. And Bitcoin, I just did a video on Bitcoin, but Bitcoin is tricky. It's tricky, but it usually follows the same market trends. So Bitcoin and Coinbase are potential shorts that I'm looking at here. In terms of put protection or specific plays versus this wild S&P bubble, in the event that it matches the shape of the GameStop bubble. And yeah, so yeah, lower high after we come back to trend, lower high and then back to trend again, then down again. It's a bunch of hits. One, two, what is it? 1, 2, 3, 4, 5, 6, 7 hits on the downtrend before you break out of it. And so it's higher, 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 lower, lower. Just a wedge breakout. And yeah, these wedge breakouts, we've seen tons of them on Bitcoin. I mean, wedge breakout here, 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 and then we got a wedge breakout here too, but it does not always, Bitcoin has been just ripping to the upside out of all the wedges, but now, maybe not this time, but we did just get a wedge breakout on Bitcoin again. But these are really common kind of wedge shapes, and the shape that we're doing right now, it just looked a whole lot like GameStop, so there's your comparison. And that's super bearish, but you know, take it into account, I guess, and happy trading.